I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money, and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, oh, what? It's like, no. Here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit.
What's up, crypto crew, and welcome back. Or if this is your first time, I'm Captain Crypto Mite, actively escaping the matrix, scoping out the crypto ocean. So if you like your odds, get on the boat, stay up to date, thumbs up, and join the hunt. The entire crypto market has been dipping. The Bitcoin price has dropped as low as 57,000 USD per coin. As for altcoins and meme coins, this week has shown blood on the street. Zooming out on the charts though, Bitcoin is still trending upwards, showing corrections sideways, many predicting this to be somewhat of a final breather before the actual bull run. So for today's video, it's good to keep in mind that Bitcoin is not crashing at all, and that the crypto ocean may have shown some rough waters, but zooming out, Bitcoin and the entire crypto ocean are still in an upward trajectory.
Stick around.
Popular American broadcaster and filmmaker and host of the Keiser Report, Max Keiser, is a Bitcoin OG, one of the few privileged investors who bought Bitcoin in its early days. Keiser started accumulating Bitcoin in 2011 when BTC was trading for around $1 per Bitcoin. In the 80s, Max Keiser worked as a part-time stockbroker. This was an experience he says helped him instantly recognize the immense opportunity Bitcoin presents. Recently, Max Keiser sat down for an interview with Blockware in El Salvador, where he and his wife Stacy Herbert are helping President Nayib Bukele achieve his aims for the Central American country through Bitcoin. During this discussion, Max Keiser makes a massive 10 million USD price prediction for Bitcoin, stating that this would be the outcome of the great fiat Ponzi scheme. The renowned Bitcoin maxi foresees a time when, as a result of unchecked government spending and excessive money printing, the dollar and by extension every other fiat currency backed by nothing will become worthless. Max Keiser says when that time comes, the world will turn to Bitcoin because it is the world's hardest money and the only reasonable alternative to the current monetary system. During the interview, Max also discusses the impact of Bitcoin ETFs and the incursion of big Wall Street players like BlackRock and its controversial CEO Larry Fink onto the crypto ocean. Max has been quite vocal about his opposition to spot Bitcoin ETFs, though he admits they have a few advantages for Bitcoin. He believes the risks outweigh the advantages, especially for investors. Now, without any further ado, here is OG Bitcoin investor Max Keiser.
First of all, look at Bitcoin in other currencies other than the US dollar. So in Argentina and these other countries, it's screaming to new all-time highs and making almost vertical up moves. And more than half the world's population lives in countries where the currency is collapsing already. The US dollar is the cleanest shirt in the laundry. You know, it's the leper with the most fingers. I used to say more often until people told me that was no longer politically correct to say that. Nevertheless, against all these other currencies, Bitcoin is already screaming to new highs. Against all fiat money, the use case for Bitcoin as and I mean, this could get into the broader argument of getting back to the history of Bitcoin, and this is the epoch, because remember during the earlier epochs, there was this idea that Bitcoin needed to handle more transactions and needed to be faster. It's a medium of exchange, and this is what Satoshi wanted. And then that's an interesting sidebar that I have a lot to say about as well. But so against all these fiat money, it's already increasing its purchasing power against all this fiat money quite aggressively. And so anybody who would want to protect their purchasing power of having an asset that is going to allow them to go into the future with their purchasing power intact and even enhanced, there's no better answer than Bitcoin. Nothing comes close to Bitcoin to maintaining purchasing power and increasing purchasing power into the future. Nothing comes close. I mean, gold is kind of the nearest cousin to Bitcoin in the physical world, and it will continue to outperform gold very dramatically. It's outperforming property. I think part of the reason the property market is collapsing is because people are moving money into Bitcoin. The ETF market and the attraction of Wall Street obviously is adding another huge pool of capital into Bitcoin. It is decentralized. People say, well, the ETFs make Bitcoin less decentralized. That's completely false. We can get into that, but that has nothing to do with the centralization or decentralization of Bitcoin, because the decentralization aspect of the protocol speaks to the underlying consensus mechanism that's proof of work and not proof of stake. So it doesn't matter if Larry Fink has 300,000 Bitcoin. He cannot change the protocol. He has no influence over the protocol, no more influence over the protocol than if this person with 5 Satoshis. So there's an incredible democratic appeal right there. It's a meritocratic appeal. So and the decentralization of Bitcoin keeps getting more decentralized because you get more nodes. I mean, I will say this about the ETFs. It is an attempting honeypot. If the state wanted to confiscate Bitcoin, they would go after Coinbase, that's the custodian for all these ETFs, and they would potentially commandeer or seize Bitcoin, as they've done in the past with gold. I mean, I think that's a legitimate risk. I think people who are not self-custodying their Bitcoin are taking an unnecessary risk with their Bitcoin. But nevertheless, I would say that's a risk. But in terms of the overall decentralization of the protocol, it has no impact because it's proof of work, not proof of stake. So the people who are successful money managers are always reducing risk to get that rate of return. And so institutionally, they have tools for them to eliminate their risk. So Larry Fink has a lot of Bitcoin in his ETF. He also has a lot of hedges on to protect himself on any downside. And those hedges for him are relatively cheap to being free, whereas the retail investor can't afford those types of hedges. And they can't manage those types of hedges. So they're just taking that risk right in their face. And so it's an asymmetric relationship between Larry Fink and everybody else, number one. Number two, as you point out, rightfully so, it's a proxy. It's not actual Bitcoin. So if you think you're buying Bitcoin when you buy an ETF, you are not. When you think you're having Bitcoin on an exchange, it's risky. There's only one way forward, and that would be self-custody.
Despite these numerous advantages, which more than anything show Max Keiser's deep distrust for Wall Street, he also recognizes the advantages of the spot Bitcoin ETFs. According to the Bitcoin OG Maximalist, one of these advantages is that the ETFs have shone a spotlight on Bitcoin's ability to demonstrate fiat currencies and gold shortly after the ETFs were launched in January of 2024. So much money excited gold ETFs. The popular gold bugs like Peter Schiff had weeks of complete meltdown on Twitter. The success of the spot Bitcoin ETFs has also increased people's confidence and conviction in Bitcoin and the bull market. Since the launch in January, we have seen Bitcoin prices go from just a little over 40,000 USD per Bitcoin to an all-time high of over 73,000 USD per Bitcoin. Max Keiser said this is not just Wall Street effect on Bitcoin, but also the impact of Bitcoin on Wall Street. Bitcoin has touched Wall Street, and investors know they have to get on board if they don't want to miss the huge opportunity that has been presented. As people like Bloomberg's Eric Balchunas have posted, these new crops of investors know they have to be part of this, not because they are 100% convinced of price gains, but because they don't want to miss out, even if there's only a 1% chance that prices blow through the roof. Now let's get back to this final part of Max's interview as he speaks further about Bitcoin, the US dollar, and the impending collapse of the financial system worldwide.
I've always said that Bitcoin has no top because fiat money has no bottom. There's no backing for fiat money. It's just paper. And I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money, and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, oh, what? That's like, no. Here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit. It's worthless. right? So that's going to be panic. Then people are going to have to trade in other stuff for Bitcoin, like gold, their house, right? And then people are going to be panicked. And they should be panicked because the world we live in now is a fake world that's been created with the hologram of fiat money. And in that hologram of fiat money, many weird things are going on. Traditional values that held society together for thousands of years are being tossed out the window. Basic idea that like a moral value or an ethical value, like mathematical certainty, 2 + 2 = 4. These types of things are being challenged, like in the Cultural Revolution of Mao, or during the totalitarianism of Stalin. It's so 1984 Brave New World-esque, and it's like the people who, again, proof of stake or fiat money breeds a kakistocracy. That would be the rule of the worst amongst us. And because they can print more money to pass new laws to make it easier for them to print more money. So it just becomes a collectivist, socialist, communist, fascist, totalitarian nightmare. All those things are all basically the same. Yeah. And it's centralization. It's hyper-centralization. It's happening now. And unlike at any period in history before, though, there's going to be a cohort of folks who own Bitcoin. And those people are going to move to El Salvador, where Bitcoin is legal tender. So there'll be a mad rush, like those images of people panic leaving Saigon at the end of the Vietnam War and trying to scramble on the last helicopter. That's going to be at JFK, people trying to scramble onto the last flight to San Salvador to escape the hell of the fiat money apocalypse. The risk of buying Bitcoin today is less than it's ever been. So it's less risky to buy Bitcoin at 65, 70,000 than it was to buy it at $5. You're taking less risk because the market is more established, it's deeper, there's more players, and the use case and everything is more developed. So the risk-reward ratio has never been better. So you're making a risk-off investment. It's not a risk-on investment. It's a risk-off investment. And number two is that you have no choice because the fiat money world and everything that's not Bitcoin is going to zero against Bitcoin. So if you're not in Bitcoin, whatever it is you're in is going to zero against Bitcoin. If you buy Bitcoin today, in 5 years' time, your purchasing power against everything else, fiat money, gold, property, will be considerably better. So just look 5 years down the road. And do you want your purchasing power to be mathematically guaranteed to be higher? Or do you want your purchasing power to mathematically be lower, as it would be the case with fiat money and anything else that's not Bitcoin?
What are your thoughts on Max Keiser's interview and his $10 million prediction for Bitcoin? Drop your reply and comment and observations in the comments below. On Friday, April 26, 2024, the Japanese yen fell to its weakest level against the US dollar since 1990, a situation many Bitcoiners have warned will gradually spread throughout all major currencies, including the US dollars, in years to come. The yen has already almost lost 11% of its value versus the USD in 2024, making it the worst performer among the G10 currencies. The Japanese yen's depreciation is further worsened by the significant gap between the interest rates in the US, which are at the highest point in decades, and those in Japan, where borrowing costs remain stubbornly low, near zero. Investors are looking to the Bank of Japan to intervene. However, experts warn that with a debt to GDP ratio of over 260%, all interventions will only stall the inevitable crisis. Data from Wikipedia shows the Japanese public debt was estimated at approximately 9.2 trillion as of March 2023, or 263% of GDP, the highest of any developed nation. The US is already about halfway to this point, and it's only a matter of time before the same is being said of the dollar. Wherever the crypto ocean is at right now, it is time to study the crypto market, Crypto Crew. You have to study the projects that are appealing to you before you dive in deep. Crypto life. Fix your mind before you get to the grind. And with that said, let's continue to escape the matrix, Let's continue to be on the lookout for the next big thing here on the crypto ocean. Grow in grace and let's make some crypto waves. Say I.